Welcome to Resilience and Resolve with Lance Drury.
You're listening to Resilience and Resolve with tax attorney Lance Drury. I'm Evan Mack, and today we're talking about amending tax returns and when it's necessary, how to do it right, and what to expect if you need to fix a past mistake. Lance Drury, sir, welcome back.
Good to see you, Evan. Tell me about the shirt you got on today.
Listen, I got to wear it in solidarity with my fallen brother. You know what I mean? He fell at the worst time possible. Where you at right now?
You're right.
Where are you right now?
I'm in St. Genevieve right now. I leave for New Jersey on Wednesday.
Oh, okay. Is that for the conference?
I got that webinar for artificial intelligence for law firms Wednesday.
I remember that. Well, let's talk about amending these tax returns. I know it's like a complicated thing for a lot of people and when they're supposed to do it, but can you talk about what are the most common reasons someone needs to amend a tax return?
Well, the primary reason is because they didn't file the first return properly. Mm-hmm. They need to correct a mistake and they want to do it before the IRS audits them. Because if they have a deduction that's looks way too high, they're going to get audited. If they didn't report all their income, they're at least going to do a letter audit and adjust the amount due. So you want to take care of this before the IRS gets involved. But here's the problem, Evan. Here's the biggest problem. This is hard to believe, but this is how bad the IRS is now. It is taking a year or 2 years to process a return, an amended return. It's
one person?
It's taken 1 to 2 years to process an amended return.
Well, just for one person?
Yes.
That's crazy.
I know. It's getting ridiculous up there in terms of their time schedules. And here's the other thing. There's a thing called the Taxpayer Advocate, and we have utilized them in certain things, mostly for processing so that they can go in because they have some leeway in there to get things moving quicker. They just cut half their force. So now people are waiting for a collection due process hearing. It normally took 3 to 4 months. Now you're lucky to have it in 6 months. Sometimes it's taken longer. Sometimes it just falls through the cracks. So what's going to happen now, because they are starting to decline certain cases, the Taxpayer Advocate. So I can tell you right now, the service from the IRS is not going to improve anytime soon, and it's probably going to get worse.
One of the scariest things I think for taxpayers is that risk of getting audited. Does filing amended tax return, does that increase your chances of an audit?
I don't think so. I think the things, there are some things that will automatically trigger an audit. Sometimes people are just randomly picked for an audit. But, when you get, there are certain red flags, if your deductions are too high, if you have a business expense that appears to be too high, or you don't report all your income, those are all triggers for an audit. And, I have people and they'll hire me to do the audit because they don't want to talk to the IRS, because a lot of those audits go criminal from what people tell them. So the last thing you want to do is to do an audit on your own, because anything you say to them, they will use against you. But what an attorney tells them, they can't use against you. And so that's why you don't want to talk to the IRS directly with an audit, because the odds of it going criminal can be substantial, particularly depending upon what you say during the audit. But you never want to talk to the IRS directly. You always want to hire somebody, but particularly when you're being audited.
Well, how much time do you have to amend a return?
I believe it's 3 years that you have to amend the return. You don't have forever to amend it, but there's time limitations on certain things. You might be able to go further back, but for one thing, you're never going to get a refund if it's beyond 3 years. You file an amended return, it shows a refund. Guess what? If it's more than 3 years old from the date that return was due, you're not going to get that refund. But that's true of anything. A lot of people have several years of unfiled returns. So now they file 18, 19, 20, whatever. And I wouldn't file 18 at this juncture unless the IRS has filed for you, because you're only required to file the last 6 years. But if you have an older return and it shows a refund, guess what? You're not going to get it, and it's not going to be applied to any of your liability, because if it's more than 3 years old, it goes to zero.
Wow. So can this be done online? Do I have to do paperwork? You have to say certified mail, or can you sit down on the computer and knock this out?
I don't think you can do it on the computer. I've never had one that I've done on the computer. There are letter audits. Sometimes you have to go to the auditor's office, or the auditor will come to your office. We just had the audit from hell in my Nashville, Tennessee audit. This was started in the Biden administration, and it's a line-by-line audit of your tax return. That auditor ate up one of my attorneys who had 150 other cases, one full day every 2 weeks in his office.
Wow.
And it took forever. And now, of course, he hasn't heard from him in 3-4 months because, it's hurry up and wait with the IRS. You have to hurry up, but then you wait on the IRS because heaven forbid that they work any overtime to catch up.
Absolutely. What kind of forms were you used to file this amendment? The form by any chance?
I believe it's a 1040X if it's your personal tax return. That is the amended form, and that's what you have to file if you want to amend your return. So if you find a mistake, please do it before the IRS audits you, because it's too late then to amend the return. The results of the audit will drive what that tax return is going to look like.
What if an amended return results in a refund? Can you still claim it?
If it's within the 3 years, but it's got to be within
Okay.
the 3 years. If you get beyond the 3 years, like I said earlier, it goes to zero. You're out of luck. It's not going to be applied to any other liability. But that's just how it works. But of course, if you file and have liability, you're going to get penalties and interest for that whole time. So the IRS, but there is 10 years. The IRS only has 10 years from the date the tax is assessed to collect. But guess what? There's so many things that can stop the running of the statute on collections, so that for each year we have to go in and compute what's the last possible day the IRS can collect against you. And I might have raised this in one of our earlier ones. We are now wrestling with the IRS where a woman, we claim the clock ran out last April. They say they have till 2031, and I don't know all the details. We're talking about over $200,000. So, that's a chunk of change. So we've been fighting on that, and again, we've been fighting forever. But like I said earlier, everything takes a long time now with the IRS.
You talked about it a little bit about the penalties or interest, but can amending a return ever trigger that IRS penalties or interest?
Not just because you were audited. I mean, if you come up with liability and it's several years old, you're going to get penalties and interest just like you would have if you would have filed it without being audited. So, but they could tack on some other penalties. There could be accuracy related penalties that are tacked on. You underreport your income. You take too many deductions that you don't have documentation for. They're going to tack on either a substantial understatement penalty for income or an overstatement penalty for deductions, or they call it also an accuracy related penalty. And that can be pretty onerous as well.
So another thing that I think confuses a lot of tax people, state and federal, and are they different? Do they go hand in hand? Are state returns automatically corrected when the federal one is fixed?
I think they do for the most part. I'm not sure all the time, but normally they do make adjustments at the state level. But I got to tell you, Evan, they do not go hand in hand. For the most part, the IRS doesn't care about the state doesn't care about the IRS. And here's a good rule for people out there to be aware of. If you have liability with the state and you have liability with the IRS, get an agreement in writing from the state first. And why do I say that? Because the IRS will honor that state agreement if it's in writing, not if you're making voluntary payments. You got to have proof that you have this agreement with the state, and it'll be used as an allowable expense in determining your ability to pay your back IRS taxes. But guess what? The state doesn't care if you have an agreement with the IRS. So you can get an agreement with the IRS first, and that's the wrong way to go, because the state doesn't care. They're not going to honor that in determining your ability to pay on the back state taxes.
What if someone can't pay additional tax from the amendment, though?
Well, it works just like anything else. Just because you can't pay it doesn't mean you're going to have to pay the full amount back. You still go through the process of proving to the IRS that you don't have the ability to pay that back. And I may have alluded to this before in other segments that we've done, but 85 to 90% of our clients never pay back the full amount, 10 to 15% never pay a dime. But it's like I tell everybody, if you hire me, you have to do what I ask you to do. This is a collaborative effort. You just don't pay me the big bucks. I wave a magic wand and it all goes away tomorrow. It's a lot of work for the taxpayer. It's a lot of work for us. But if you want to get a deal from Uncle Sam, you got to put in the time, and that means financial statements, bank statements, credit card statements, debit card statements, because for certain categories of expenses, you're going to have documentation to prove to the IRS, or they're not going to give you your actual expenses.
How important is that, documentation, organization when it comes to any problems with the IRS? Would you feel like that's probably a paramount or like the top thing you need when you're trying to go through this?
It's absolutely paramount. We have people and we'll talk to them in the initial consultation, and the IRS will tell you. They'll send out a letter and say, hey, we're looking for this, like car and truck expenses. And so the first thing we ask them is, do you have documentation for this? Because if you don't have documentation, we're not going to be able to help you out. Now, you still want to hire us because you don't want to have to talk to the IRS directly. But if you don't have the documentation, either for that or for your financials, for certain categories of expenses, you're not going to win. You have to have proof for all of it. That's why people tell me, well, I sent in my tax return. Well, guess what? We call the IRS up, or we get on, our computer system that has access to the IRS systems, and the tax return's not showing up as being filed. And I asked them, did you send this in by certified mail? They go, no. I said, anything important to the IRS, we send in by certified mail. We have to track it. We have to make sure they received it. If we don't have proof, guess who's going to win that argument? And guess what the other thing is? Evan, I think I've told you this before. The other thing that's as screwed up as the IRS is the Postal Service.
Yeah.
And so they lose stuff. So you better track anything that's important to the IRS, because if you don't have that, then how are you going to track it? And sometimes people file their own returns and we don't know before they hired us. We don't know because we go in, they're not showing us processed. So we don't know if they actually sent them in or not. That's why we do it for an existing client. If they have unfiled returns, we want them to come through us so we can track it.
Yeah, that's important stuff. Every time you can't, I know you can't emphasize enough that certified mail and tracking certain things that you send and how much that can really, really help you when you're going through stuff.
Yeah, you've got to absolutely documented. And that's one of the biggest problems. 70% or more of my clients are self-employed, and they just don't keep very good records. They don't have a separate bank account for the business. They commingle personal funds and expenses with the business, which is a nightmare for the IRS. And sometimes it's hard to get a deal when you present that to the IRS. So you've got to keep good records regardless.
So when should somebody come into a Lance Drury or a tax attorney when they need help with an amended return? When should they do that?
Well, they should do it as soon as they know that they need to amend the return. So yeah, don't delay. Delaying with the taxing authorities is never a good tactic unless the collection statute is going to expire within a couple years. Then you might want to delay things with the IRS to run out the clock. I think I've talked about this before. I got a guy, $90,000 is going away in September. There's no way the IRS is probably going to collect a dime out of that $90,000. You have to remember, they're a bureaucracy. Things fall through the cracks. And because they're understaffed, a lot of things are starting to fall through the cracks. So sometimes in that limited circumstance where the collection statute expires within 2 years, then you might want to delay a resolution.
Wow. Lance Drury, sir, thank you again for all the information.
Thank you, Evan. I like your shirt. I think I'll go out and buy one.
Oh, I think you should. Remember, everyone, mistakes happen, but ignoring them can cost you. If you need help amending a return, visit lancedrurylaw.com and get it done the right way. Thank you all for tuning in.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.